group and let you guys watch.
Do a live, like on air trading.
I could totally do it. I trade volatility. So I don't trade actual stocks. I trade the volatility.
The game would be is if we could start a show, start trading, and at the end of the show make a GER.
Oh, I could make a G.
Yeah.
I can make a G in a show.
And then have it just going live. And if it goes good, great. If it goes south,
Who cares?
Yeah.
Who cares? I could totally make a G during a show. That's easy. Yeah, did you guys see? I threw a trade up there last week. I told you, I'm like, this will be up. It was up 3% the next day. I'm like, I could do volatility. If you guys want to see me trade, we may just do that. I may just get a wild hair and decide an hour or two a week.
The VIX.
I love me some Vicks, man. You have no idea. And I'm not talking about cough drops here. Love me some Vicks.
Cold and flu season. Might as well.
That's right. It's cold and flu season out there, kids. Welcome to the show, Jason Bible, Texas Real Estate Radio Network. I'm here with Brian Burr, and we were talking a little trading earlier.
It's everywhere now.
I know. Everybody's a trader.
Everybody's a trader.
The most hilarious tweet I saw yesterday was a guy comes out and says, look, I'm a veteran trader. In all of my 6 days of experience, this has been the craziest day ever. And everybody on Zero Hedge was just making fun of the guy. I'm actually I don't know what they call it now, an enterprise or premium member or something like that, a Zero Hedge. So you can actually get all of they have a data dump in Dropbox. You can get all this data. You can get the hedge fund notes, all that stuff. So I'm reading some pretty interesting stuff these days. But anyway, so everybody's a trader. And they're crushing it, bro.
Nobody's losing right now.
Nobody's losing. Despite the fact that half of my Facebook is like, I lost this much, I lost that much, I lost this much. I'm like, I'm not going to say which big investment bank, but they have a term for retail investors like you and I. They call them Muppets.
They despise the retail investor.
They despise the retail investor. Yeah. So when volatility increases like this, you see the market gets frothy. You'll hear this term, the Muppets are about to get mowed, meaning they're setting up counter trades that here's the other thing. People think they can see open interest in options and buy and sell and all of this stuff, and they can't, but they don't see what are called dark trading pools. You don't know what the dark trading pools are doing. And when all that kind of hits the market at once, like I'm telling you, there are retail investors that are about to get mowed here, and it's going to be hilarious to watch. Yeah. So I did see a note this morning that GameStop has hired a CTO, Chief Technology Officer.
Now, yeah.
Here's the irony. They didn't have one before. A company that sells electronics, essentially games, right?
Yeah, right.
Did not have a Chief Technology Officer. That might be why the company is worth $6 a share or whatever.
It was a dying brand, right?
Yeah,
Everything is put it online these days. So.
Yeah. So, anyways, we are bookended by 2 stock trading shows nationally. So, I imagine you guys have already, if you're listening to our real estate show, you're probably already getting an earful of all the stock trading nonsense and hire me to show you how to trade options and all that nonsense. But in any case, we're a real estate show.
That's true.
Where we actually make money doing what we talk about.
Right. We like things that are consistent, predictable, and the stock market is not that.
It is not that.
Right.
The question I always ask folks is, what is the risk?
Yeah.
And nobody can ever really explain to me what the risk is, right?
Right.
So, in any case, it's it's like, what's the risk of owning this or that sort of thing. Yeah. I dropped this stat on the room a couple of weeks ago on one of these panels I was on. I said, you guys, they were all talking about, Zillow's not making any money and Redfin's not making any money and, Open Door and all these other companies. And I said, you do realize 60% of publicly traded companies have a negative net worth.
Right. Absolutely. Every one of them carries debt pretty much.
Yeah.
So, yeah.
But debt that exceeds their value.
Value, right.
Yeah. So it's like, you do realize, and I almost put a finer point on it. I said, those of you who have college age kids with no debt and have like a minimum wage job.
Yeah.
Are worth more than 60% of companies that are publicly traded. I want everybody to think about that for a minute. Your dopey kid, that's how my dad described my brother and I. Your dopey kid has a higher net worth than, like my son at 13, because he's got a couple $100 in a savings account somewhere, has a higher net worth than 60% of the publicly traded companies.
Scary, huh?
It's insane. And your 401k and IRA, and of course now your brokerage account are all trading in that nonsense.
Yeah.
As if there's real value to it.
Yeah, I don't understand. Like I've been watching this documentary. I think I showed you or I posted, and it was talking about how the pace at which money is being printed.
Yeah.
And then what happens if the dollar? Everything's really tied to the U.S. dollar. So the companies are going through the roof. Earnings have never been higher. I mean, earnings per share are just they're ludicrous right now.
Yeah, it's insane.
But at what point does the dollar get so inflated, or there's so much of it in the market to where it slowly starts to slip, or what do they call that? Not necessarily the value, but I guess that really is the
It's
value.
a purchasing power, the value of the dollar, right? The way I look at it is the easiest way to price what something is. Well, let's look at global debt. 60% of global debt pays less than 2% interest, which is insane.
Yeah.
So it's absolutely insane.
Yeah, you're almost losing by default by keeping it in a savings account or a money market account, because inflation has got to be higher than what is being stated.
Oh yeah,
it's got to be.
Well, you were on the webinar for a little while there, new dad. I think you faded quick on when I started talking about inflation on Monday night. It's like inflation is much more rapid than I think people realize.
Yeah.
Hey, what, if you don't mind sharing, what did they hit you for to get the kiddo out of the hospital?
Right under 10.
That's not bad. That's about right.
Yeah.
10 G's with insurance.
That's right. Yeah.
Yeah.
Yeah. We did cash pay for the whole thing.
Oh, okay.
But it probably would have been more because they really pushed for the C-section. And it's like, the minute that you're holding them up and their staff, they're like, let's talk about other options. And we're like,
that's right. No, we're not doing that.
We paid for 3 days. We're going to sit here every
day. That's right. Well, C-section, that's surgery, right? That's when you go into, that's when the checks start getting big. You got to bring an anesthesiologist, a surgeon. I mean, it's a whole deal, right? Yeah. But I mean, just to have a kiddo in this country is 10, 15 G's, right?
Yeah.
That's with zero complications, right? You guys were in and out like nothing, like champs.
Which I don't understand, because how are other people paying for children? Are they getting it for free? Is the government subsidizing?
Somebody's paying for it.
You and I?
Yeah, I think that's how that works.
With the little income we report?
That's true. I report all of the required income which I am required
for the record.
For the record, right?
Playback?
No, I'll tell you who they go after. The guys that just made $100 a share on their stocks. They're all about to realize, just like the Bit Bros did last year, that 40% in taxes really is not great.
Yeah. I mean, it's only going to get, I imagine, getting worse, if they're going to try to raise the rates. But I don't know. That's why real estate is such a beautiful thing, is because deductions are everywhere.
Oh yeah, it's all over the place. Yeah. You own a business, and then you own the real estate, and it's all deductible.
Right. Yeah.
We are deducting $160,000 in Teslas this year.
Right. I was talking with another guy, and I was like, think about this. All our friends are in real estate. Every lunch we've ever done, it revolves around some kind of deal that we're doing.
Yeah.
Our wives, girls, they're all in real estate. So it is, I mean, really, if you look at every aspect of our lives, it revolves around some type of potentially deductible item.
That's right.
I don't know. That's pretty cool.
I've, we're talking about Travel Club. We haven't talked about it Well, we can talk a little bit about it publicly. So Travel Club, we've got to do recon for Travel Club. Yeah. And that's all going to be deductible.
Right. In Vegas.
In Vegas and in Miami. And we got to find a mountainous ski area too. That's the other thing. We talked about Tahoe, but I've looked at market's too hot there. I'm a Colorado guy. I'd love to have a place in Colorado.
Absolutely.
But Rob really wants something ski up, ski in, ski out. And I'm like, all right, well, we'll see. So in any case, it's interesting when you look at the landscape of what you can invest in. And whenever I see like, oh my gosh, I made $1 million on, the stock. And I'm like, okay, so now what? So you made 20 million, half goes to the government, you made 10.
Right.
So now what do you do with that 10 million? Because there's not a GameStop every year. In fact, the joke on Zero Hedge is this is the most profitable trade since we started 12 years ago. Mm-hmm. All right, so now what?
Yeah, I don't know. I mean, stock market, that's why I got out of it 2 years ago completely. Yeah. And only until this drama has started have I slowly bounced back into it.
Yeah.
But I still don't know what I'm doing.
Nobody knows what they're doing. That's the trick.
Yeah.
It was a subgroup on Reddit that said, buy this stock.
Right.
That's what caused all these gains in the market.
Just to stick it to the hedge funds, I'm like, I'm going to throw some money at this.
That's right.
Even if I lose
Stick
it all,
to
just to get it, just where they have to pay another $1 on my behalf.
That's right.
Yeah.
Although, what's kind of weird is we're probably going to end up owning a hedge fund that does real estate. So we're going to end up just being the man anyway. It's kind of sad. But we're talking about real estate. Brian does a ton of notes for us. If you guys are interested in buying notes in your portfolio, Brian, what's the best way for them to get in contact with you?
Cell phone, if you just want to talk to me directly, it's 713-620-8148. That's my personal cell phone. Be happy to talk to you about everything that we're doing here at Mr. Texas Real Estate, from notes to syndications.
Yeah, it'd be doing real estate, right? Not making $1 million overnight, but certainly over time. All right, it's Jason Bible, Texas Real Estate Radio Network.
You still got the music playback? Did you find the Wall Street Bets guy?
It didn't come up as a PNG.
It's too bad.
Man, couldn't put him next to Bernie. That'd be awesome. Put him next to the burn.
The burn.
The burn.
Can you airdrop me that photo? I can probably put it up there.
Sure. Yeah, hit you around.
What do you guys? What is it that you would say you do all day?
What do you do?
We goof around on a nationally syndicated radio show.
Rock, what's your cell phone?
281-658, and this is going to go off for everybody now.
That's okay.
4851.
Okay, see if this comes through. Yeah, I'm going to get a tattoo of that.
That'd be great.
It's right here.
Right there.
You remember back in 2021, GameStop?
GameStop, bro. GME for life.
Okay.
Welcome back, Jason Bible. I'm here with Brian Burr, Texas Real Estate Radio Network. We're talking about money today.
Talking about money and real estate.
Money and real estate. Notes in particular.
Try to stay back on subject. I know we always get off on a tangent.
Totally get off on topic. Yeah. I was chatting with Rob this morning, and Elon Musk did an interview with Sandy Monroe. So I asked him, said, how was he? He's really good. So Sandy Monroe is a guy who takes cars and tears them apart and then essentially builds these like spec sheets.
You hear him.
Oh, is he? He builds these like spec sheets and then sends them to other manufacturers, like they're for sale. Right. He does it with aerospace and all this stuff. So anyways, he's been a big fan of Tesla, and he had Elon in to, interview him. And Rob said he was a little starstruck. I'm like, yeah, I can imagine. It's an intimidating interview.
Absolutely.
One of the smartest people on the planet right now. So it's a tough interview. But anyway, and he said Elon was pretty reserved because he was waiting for the gotcha questions, since he's being interviewed by an engineer. But anyways, said it was good. But back on topic, outside of Tesla. So we put our money in real estate. We may play around the stock market from time to time, but really our money is in real estate.
Absolutely. Yeah. And it's all variations. Single-family rentals, multifamily, Airbnb. We have notes, private lending. We kind of take the full gamut.
Yeah. So anything that cash flows,
it's got a cash flow.
It's got a cash flow. It's got a little bit of equity in it, and we think that'll appreciate in the future is an investment for us.
Right. Yeah.
Which is one of the reasons why the stock market is not, right?
And it's funny. I had an interesting story today. I was on a phone call with someone who was looking to invest from their retirement account. And so I'm not going to drop names, but so they basically told me that their funds were with a retirement account that I had not heard of. And during the phone call, they got a phone call from their account rep, which turned out to be a broker.
Oh, interesting.
So it wasn't an IRA account. It was basically the brokerage firm that had their retirement money from his past job or previous job. And so he started drilling me on all of the things that we're doing within real estate.
Oh, they put him on the call.
They merged him.
Oh, this is awesome.
And so I don't think he didn't do it to know like, hey, you just put two lines in the same, same room. But he meant to do it like where this guy could help facilitate the removal of his retirement.
Gotcha.
Right.
Okay.
But this guy was like, what are you guys doing? How are these REITs? I'm like, no, it's not REITs. No, we're just, we're investing in real estate that's going to cash flow with tenants. This is, tried and true. It's tested.
Yeah.
It's been proven.
Been doing it 100 years, man.
Yeah. And so the funny thing, he was asking me, because how I kind of came to work with Mr. Texas Real Estate is I was an investor and I just liked what you guys were doing. And that's like, let's work together on this. And I'm glad you guys invited me in. So this guy was asking me, he goes, how are you compensated? What do you,
Yeah, how do you get paid in this thing?
Yeah, by soliciting this couple, what are you making on this deal? I was like, I'm making nothing on this deal. I was like, whether they invest or not
because it's
my money's already in this transaction. It's already in the deal. So if they want to participate with me, great. I was like, what are you getting paid?
Oh, oh.
Well, so Rob was like, "What are you making on the deal as a broker?"
That's right. As a broker, what do you make on that stuff?
Yeah. So,
And the brokers do pretty good.
yeah, they're usually 1% to 2% of whatever they're managing for that
Yeah.
client, and so I can see why they don't. He's going to fight me on trying to like go toe to toe with, we have preferred returns, right?
Mm-hmm.
What does your fund do, or wherever their
Yeah.
money's in with you? What is it paying?
Right.
And it's funny because the client stepped in. He's like, "Do you offer something that's 9% that's preferred?" And the guy was like, "No, we don't. We don't have that in writing. We can't put that in."
That's right. Yeah. What do you mean you can't put that in writing?
Yeah.
Because our fund, it's all in writing.
Right. I know. So I was like,
So we have a fund that's registered with the SEC, Securities and Exchange Commission, and we pay a 9% preferred return.
right,
So that gets paid out quarterly. You put $100,000, you'll make $9,000 this year.
right,
And anytime we sell an asset in the fund, 10% of the equity is then paid back to those investors.
absolutely.
So it could be 12, 13, 15%
Yeah,
rate of return per year over the next couple of years, right?
Right.
9% preferred return, we pay that every year, but we may not sell some of these things for 3 or 4 years down the road. And
Right.
so that's kind of how that works. But yeah, that's interesting that they got in the, like, do you guys have anything like that? Well, no, we don't. I'm like, of course you don't.
Yeah. That's the first time I've actually had to battle, somebody that was on the equity side and trying to, take and I just told him, I was like, look, I was in the market. I lost a ton of money in the market in a short period of time. And I'm glad I never went, look back. And all we do is real estate now. And it's proven. I can drive by every single one of our assets,
Yeah.
touch it, see it, cash flow it. What can you do with your paper? Shareholder.
Yeah. Yeah. Here's a shareholder of a company that's probably has a negative net worth.
Right.
Well, that's great.
Yeah.
Phenomenal.
Yeah, I think anybody that's honest with themselves, that is a financial planner, that has all of their the clients' money tied to the market, if they can't admit to themselves that that's risk,
Oh, yeah.
I don't know. Like I don't think it's ethical.
I don't see how, as a financial advisor, you can't say, hey, look, Mr. and Mrs. Smith, you ought to have some of your portfolio in real estate. Like, I don't believe 100% of your portfolio should be in real estate, but I also don't think it should be 100% in bonds and equities, right? I don't think it should be in the capital markets.
Right.
I think you ought to have some exposure to real estate.
Yeah.
And I think any rational money manager is going to tell you the same thing. I think you ought to have some exposure to the precious metals market.
Right.
It just kind of makes sense, right? But to have 100% in equities or 100% in bonds and I don't get it.
Yeah. And so, that's what we ask. We always ask investors whenever we sit down with them or they call in, is we find out exactly what do you need at this stage in your life. Mm-hmm. Are you looking for cash flow? Are you looking for monthly, quarterly? If you don't need cash flows coming out of a retirement account, money that you can't touch if it was being paid monthly or quarterly. So equity is probably a bigger concern. Mm-hmm. We have that option too.
Yeah.
It's just talking them through it,
Yeah, like what are you guys looking for?
Right.
It was interesting. Rob and I were talking about that. We're going to teach a money raising class here coming up. It's going to be $2,500 a head. There's room for 24 of y'all in the class,
Right.
And it's going to be a great class. But one of the things that we always say, we've been to these seminars where these guys charge like 25 grand on how to raise money, and it's funny because nobody ever asks the right question, like, "Hey, Mr. and Mrs. Investor, what are you looking to do? What have you done in the past?
Right.
And what are you trying to do with your money now?"
Yeah.
And there are times when somebody says, "Oh man, I got $100,000 and I need to turn it into $1 million in 2 years," and I'm like, "Hey, look, 50% rate or 100%. Oh, it's not. I'm sorry, 10x return, so 5x a year. I'm like, I just don't know how you're gonna accomplish that without taking on a massive amount of risk.
Right.
So."
Yeah, and
This
they're not going
might
to do
not
any
be-
work for it too.
And
They
they're
want
not-
you-
yeah.
They want you to do everything.
That's right. Can you turn my 100 grand into $1 million in 2 years? And I'm like, I can do that with my money, but because we're working for it. But passively, I just don't think that's really something that's going to be an option for you.
Yeah.
So sometimes it's sitting down with these folks and saying, hey, what are your expectations and what's realistic and what's not? And so that's an interesting phone call to get the broker on there too.
Yeah, it was pretty interesting. So I could tell, like, towards the end of the call when it started getting like a little bit contentious.
Yeah.
That the guy that merged the call in, he felt like, hey, look, because I was just there to try to help the guy. Like, here are options, right? You
Yeah.
can just pick one that fits your, risk tolerance plus
Yeah.
what your immediate needs are. And the broker was coming in here like he's just the desperate, the girlfriend that's about to get left.
Yeah,
you
yeah.
know? And I was like, look,
It's just like, hey man, look, it doesn't matter to me. Like whatever you decide.
we are going to continue to do this with or without the client.
That's right. Yeah.
Right.
We're not going anywhere, and whether you're on board or not doesn't really matter.
Right.
Like it matters, but it's like,
Right.
It's not going to stop what we're doing.
Right. And that's just the fact, you know. I mean, that's why real estate is it's awesome. I mean,
Yeah.
But everybody's got a different time when they're going to do or make a move or you know, jump into it. But you know, hopefully they'll take our opinion over his and see the kind of returns we can generate compared to what he's been getting or been stealing.
Yeah.
Right.
That's funny. Yeah. So it's interesting, especially when we start talking about preferred rates of return. It's like, obviously they're not guaranteed. That's why they call them preferred rates of return. But it's like, yeah, we've been paying 9% a quarter, even in the middle of Corona.
Right.
In the middle of all this craziness, it's just 9% checks go out every quarter.
Yep.
Just send them out. So, granted, the stock market's been doing some wild things, but one could argue that's a devaluation of the dollar, which is why we give equity away as a part of our deals. So, all right, when we get back from the break, we'll talk more with Brian Burris, Chase and Bible, Texas Real Estate Radio Network.
I should have gotten coffee. That was good. Smart move.
Yeah.
You drink a black?
Yep.
Yeah.
Take it straight. We should be. Our fancy coffee machine should be here pretty soon.
Really? Is that the one with the?
It's the frother and all that stuff.
Subscription agreement.
Yeah,
that comes with it?
we have two of them. We're gonna have one down here. We're gonna have one upstairs. And Rob said the difference is the one upstairs has the milk frother.
That's important.
Yeah.
That's when you get bougie. You know, that's when your coffee.
It's ridiculous.
You're like the Starbucks upstairs.
Yeah. Guy that wears cargo pants to work needs a $10,000 coffee maker, right? Welcome back, Jason Bible, Texas Real Estate Radio Network. I'm here with Brian Burr, and we are talking about investing in real estate passively. Today's really kind of a passive show, right?
Yeah.
So it's not if you're an individual who's got a couple of bucks in a retirement account or sitting in a brokerage account somewhere or sitting in a checking account, and you just want to expose your net worth to real estate without all the headaches.
Right.
Easiest way to do it is buy some notes, invest into syndication, invest in one of these funds.
Yeah. You know what? I like our approach better. And again, I like to beat up on the stock market because if someone invests in anything that we do, right, they have the ability to come in and say, like, I want to see, how do you guys do what you guys are doing? And you guys take this hands-on approach. They can come see the property, see it during when it's under construction, seeing when it's nice and fixed up. Can you imagine going to a company after you bought a share of stock and being like, hey, how's this work?
Yeah.
You know, get the hell.
What are you doing in here? Get out of here.
Yeah, like we've got
show
nothing.
up to one of the Amazon shipping centers over here and go, hey guys, I kind of want to check out your last mile strategy. And they're like, what are you doing here? Get out of here. Crazy.
That's
we'll put you in the truck and take you down to Corpus.
That's right.
Or we'll go over to one of these apartments you walk through and go, holy cow, this is crazy. I'm like, yeah, it's kind of a mess right now. We're working on it.
Yeah, you show them how the sausage is made.
That's right. Yeah.
There you go.
Which I will tell you, sometimes you got to hold your stomach a little bit because it's pretty rough. But when that sausage is done, it is
it's delicious.
Good.
That's right.
It's some good sausage.
Yeah.
So, but yeah, the other thing I always find interesting is when you talk to kind of the money manager, broker guys, you have to be an expert in so many areas that it's impossible to be an expert in any of them, right? It's really just kind of like, well, we can sell this basket of funds and we can sell this basket over here and this one, and based off CAPM and a couple other models, we can come out with, well, we think this is going to be the, a risk-adjusted rate of return, but you really don't know.
Yeah, no.
I mean, it's pretty easy for me. I can pull up HAR and go, this is what it's going to rent for this month because that's what it's rented for the last 2 years.
Right.
And this is what we bought it for. And we know our construction cost. Like, there's so many, there's fewer unknowns in real estate than there are in the stock market.
Yeah.
Who would have picked GameStop and this whole nonsense? Now, the reason I'm going back to GameStop is a lot of people may have missed this, but it's one of the reasons other stocks have had some drag on it. Because what has happened is when some of these big funds had to cover their shorts, they sold long positions in other assets. Amazon was actually negatively impacted by this earlier last week. So it's like, it's not like people sometimes view what happens in a certain part of the marketplace and they go, oh, well, it's just that little piece. No, there's a financial phenomenon called contagion. So it runs rampant through the marketplace, and you're seeing that, and it's going to reverberate for another couple of weeks. So
yeah, and I like the fact that you have guys like Elon Musk, you have Mark Cuban, Kevin O'Leary, all stepping up and saying, "Hey, look, what went down, totally appropriate." You know, this should shine a little transparency on these hedge funds for their short positions, not getting too out in front of their skis to where they'll bring this back a little bit. Where they got caught.
Yeah, they got caught out. But these guys do it all the time. I mean, it's like it should be no surprise because it's something they do all the time. They're called naked shorts, right? So they do it all the time, which is fine. It's completely legal.
Yeah.
And then the other discussion about the brokerages closing down because they couldn't fulfill the orders. And I'm like, look, guys, you got to understand, these brokerages are it's just like a Walmart. Like you can't have a run. Everybody remember, actually, you know what? Let's back up. Does everybody remember the run on toilet paper
Oh yeah.
from Corona? So that toilet paper was called GameStop. Everybody ran to Walmart, H-E-B, Kroger, Sam's Club, Costco,
Right.
and bought as much toilet paper as they could. And what happened? We ran out of toilet paper.
Right.
So that is exactly what happened. And then the broker just said, no more until we can figure out where the toilet paper is in the supply chain.
Right. Yeah.
So that's what happened when I can't remember who actually, it's a federal group under the SEC that manages the clearinghouse for a lot of these, the regulatory side of these clearinghouses. And they called the guys over at Robinhood at like 3 o'clock in the morning and said, hey boys, we're going to need $2 billion in cash to be able to float your VAR, which is value at risk, because you guys have exceeded like 9 sigma of the variability in the price of these assets. And of course, they ended up talking them down to like $700, $800 million, something like that. And then they were able to start trading again, but in limited fashion. Because why? They ran out of toilet paper to sell.
Yeah.
Everybody was buying toilet paper, despite this being a virus with the face. So I never.
Well, I can imagine, like, if you're an investor that had your money with Melvin Capital, right?
Oh,
Like, let's
yeah.
say you're just a guy like, the guy off the street, he had some good liquidity, got
Yeah,
good
got
money.
a couple $1 million. He's over at Melvin.
He's over at Melvin, and Melvin is now maxed out, right?
Yeah, Melvin's-
possibly shut its doors.
Yep.
Like, I feel bad for that person where a couple of guys got on Reddit and basically shook the market.
Oh,
And
yeah.
Melvin Capital probably had a legitimate reason for shorting GameStop.
They do.
It was
They
maybe it was
do.
supposed to be out of business.
Actually, a lot of those do. Melvin and Citadel did too. So one of the things that I found fascinating is there was an interview where somebody said, well, what these guys are doing is wrong and all of their stuff. And they shouldn't be copycatting each other. And he said, look, Citadel is a powerhouse. Like anybody that knows that portion of the market, those guys know exactly what they're doing. There's some sharp dudes at Citadel. And what they were doing wasn't wrong. It was based off their actual analysis.
Right.
And so then you had all these guys from Reddit that basically said, well, they're so short, they're not going to be able to. You've always got, in the trading world, you always got to give yourself a back door, right? You got to give yourself a way out. And so they had gone short so hard, like I want to say it was like 150, 160%.
Yeah.
So they never gave themselves a back door. So they just kept buying all the long positions out. And then sure enough, there's this huge short squeeze, right?
Yeah.
Which will unwind after a while. And that's why you're starting to see the losses, because you're starting to see the value of the stock collapse, which I think now it's down to like 80, 90 bucks a share. It peaked at like, I don't know, 400 or 500, whatever it was.
Yeah.
So
Pretty
it's fun to watch.
Fun to watch. I hate to be a part of. I mean, as a passive investor with Melvin, but that's why I kind of stick to our lane. Like
Yeah.
we can control things in our market way more than say a passive investor in the stock market.
Oh, yeah.
But
Well, and we can corner markets too. A lot of folks don't know that. Like if you're a real estate investor and you're big enough, we've gone in and bought entire sections of neighborhoods.
Right.
We just go in and control the whole market. Just go in there and buy it all up. And then what do? Do we decrease value or increase? We always increase value. So we go in and buy a market up. We rehab the properties. We rent them. We just lift the neighborhood up. We're doing that in Corpus Christi right now through our Corpus syndication. I mean, it's like go in there, buy as much stuff as we can in this 4 or 5 block area, keep raising rents, raising the value of the property, and then possibly sell them.
Right.
What's been the real surprise for us is we have owners now in that same neighborhood that are contacting us. They're like, hey, we'd like to sell to you guys because we own this land over here, and as you guys bring up the value, then we're going to start new construction.
Yeah.
So it's been a real eye opener for us as we start to buy in these markets. I can tell you right now, I know for an absolute fact with our buying activity down in Surfside, we've had a huge hand in that marketplace, right?
Everybody knows who you are in that market.
Oh, they all know. They know exactly who. Good or bad.
Good or
They know
bad. That's
exactly
right.
who they.
Some love you.
Some may not, but that's okay
Yeah.
because we're buying these things, we're rehabbing them, fixing them up, and then we're renting them out. So that's one thing it's really difficult to do in, let's say, the stock market, to go in and corner something and be able to really produce pretty high level value for it.
Sure. Yeah. Make it one. Yeah, there's a lot of guys I know that they'll buy and they'll fix in an area and they're going to set their comp and then they buy another property, fix it, renovate it, and then it gets a higher number. They can sell, so they go and they basically change the whole market, and they set their own wage at the same time.
Yeah.
They're just increasing the value of the neighborhood. And we have a couple builder friends that they do that. They'll go into a market relatively underserved with new construction, change it drastically from one property, and maybe they get like $250 on the first sale, and it's like $275, $315.
Well, regular builders do this when they develop a neighborhood.
Right.
Prices never stay the same; they always just keep going up. So this is a relatively known real estate phenomenon. It's very common for this to happen, right?
Yeah.
They go in and buy, they rehab, they build, and then new folks get in, they sell it, they go to the next one. They just keep moving up the prices. So that's relatively easy for us to do in real estate, but it's really hard to do in the equities market. All right, we get back. More with Brian Burrs, Jason Bible, Texas Real Estate Radio Network.
When are we going to install the TV?
That's a good question. I have no idea. I think we're waiting for some other stuff to happen. That TV is going to go from my office to down here, and then I'll get a different one. But that's the biggest. The TV it's in that I just stole it because I'm like, I want this TV. It's like being used for nothing. So, anyways, it's the biggest one we can mount to the ceiling, and then I'll get something else. But pretty soon here, and then we need an on-air sign. I sent an email to Andy or text. We're getting all new track lighting in here. He's searching all that stuff up. Yeah. So this is all still temporary. So we'll get it all sorted here pretty soon. But pretty exciting. Texas Real Estate Center. This is not the only one. I'll tell you guys this. We're looking for two. We're looking for 2 more buildings. And I keep hearing people talk about how commercial real estate and office spaces, the market's crashing and everything's on sale. I'm like, I don't see it.
We still get deals all the time from people that are either trying to raise money for a deal or office buildings being sold for sale.
But I don't see any smoking hot.
No, it's all hot.
All right, let's go ahead and bring it in. We'll talk about this. Welcome back. Jason Bible, Brian Burr, Texas Real Estate Radio Network. We were just talking about office buildings. We are here in the crown jewel of Texas real estate, the Texas Real Estate Investment Center. And it's really the hub of all the activity in Houston.
That's right. And you did it in less than a year.
In less than a year. Kind of crazy. We went from the Mr. Texas Real Estate brand. That was, when did we launch that? February? Maybe it was February 15th or 16th. Was that last year around this time? I'd have to ask Rob. I can't remember. The first radio show was April 1st.
Right.
And we literally made that brand up overnight. And in less than like 18 months, we got a building with a name on it. It's crazy how fast it's grown. So let's go back to the point. So one of the things I had heard when we bought this building, people were like, no, Jason. Oh, yeah. This is like May. Don't buy it. Jason, you don't understand. Office space is going to be on sale. There's going to be all these vacant buildings, and downtown is just going to crumble. It's going to look like downtown Gotham, and there's going to be Batman and Robin. You're like, whoa, wait, what are you talking about here?
I remember that.
It's going to look like Thunderdome.
Yeah.
Like, Mad Max is running down the street there, and Tina Turner's going to come back. Anyway, so I was like, what? You're not even making any sense. What do you mean office space is going to disappear? Well, everybody's going to work from home from now on. The rest of their lives going to work from home. Like, that's not true. Yeah. So I've been on a couple of panels, and I've done a couple of webinars where people are telling me, like, Jason, I can't believe you bought that building. Office space it's on fire right now. Like, it's just imploding. And I call all my broker buddies who do commercial real estate, and I'm like, hey, you guys seen any smoking hot deals in commercial real estate? And they all go, no.
Right.
There's no smoke. They'll say, there's always one or two, but those were in trouble before Corona.
Right.
He's like, now they're just looking for a reason to get out. But there's no great deals. There's no like markets collapsing and all that. And they were like, why do you ask? I'm like, because I'm trying to buy another building in the Hill Country between San Antonio and Austin. I need another building in Fort Worth, like between DFW and Fort Worth. Yeah. And they were like, okay, good luck.
That's right. Yeah, it's at least our market's safe. I mean, I can't speak for East Coast, West Coast, but
yeah, Texas is pretty legit.
I like it. Yeah, this is always going to be a great market.
It's been a great market for 40 years.
Right.
So I think it's still going to be a great market. Don't see it ending anytime soon. When all your friends stop moving from California and New York and Seattle, my brother just moved down here from Seattle. He sent me a text again last night. He said, man, I made another offer on another house like Sunday. List price was 302, and the agent said, if you're not 75 G's over list, don't bother. Yeah. Sure enough, highest offer was almost 380.
Yeah, it's insane. I mean, anybody who's buying right now, I mean, they're getting either asking price or over, unless they do something crazy about the property that won't,
won't sell.
justify it. Yeah.
He said he goes into neighborhoods where builders are building, and he said, I've never seen where they just pour they pour slabs in that entire section. He said they're just coming out and pouring slabs. It's like there's hundreds of slabs out here.
Yeah.
And then they just can't get the wood in fast enough to do the framing. And I said, yeah, that's how it's going to be. I said, this is just the start. He's like, this is going to end. I said, no.
Not at all.
And he came from Seattle. I'm like, you came from one of the hotbeds.
Right.
It's now in Texas. I said, all you people from Seattle keep moving to Austin because it's that tech stuff, right? And so he's like, I just don't know. I think I should rent. I'm like, no, because the house you're renting now is in a real nice house in Round Rock. I said, the house you're in now, it's going to get so expensive, they're going to sell it and take their $500,000 in profit, and you're going to have to find a place to live.
Right.
You might as well find one in that neighborhood for $300,000 or $400,000 or $500,000 now before it's $1 million 5 years from now.
Yeah.
Because that's totally going to happen in Austin.
You remember the economist that came? I think it was at one of the jet lending events.
Yeah, Dotsauer. Yeah.
There you go. And he was saying this was less than 2 years ago.
Yeah.
When he was saying 3 million, close to 3 million over the next 10 years is scheduled to be in the Greater Houston
Yes.
area.
Yes.
And we're what, year 2?
Yeah, we're year 2.
Yeah, and I know construction's around where I live downtown, and like East Downtown, the East River development that's going to be in the next 5 years, 6 years, whatever. It's exploding. I mean, like, dirt, just vacant dirt anywhere inside the loop is.
It's taken 3 weeks for us to get a beam for my 1,200 square foot house.
Yeah.
Like the plates and the wood and all. 3 weeks to get a beam, and it's not even installed yet. We're hoping to install it on Friday. It's like, I don't think people realize how crazy this marketplace is, and it's not going to stop.
Yeah.
Like, it's just not. So, and why is it going to stop? Because the people that are buying these houses have really great credit, and they've got great balance sheets.
Yeah.
Starting in 2022, the largest demographic in the U.S. history is about to start buying homes. And we can't build them fast enough.
Right.
In fact, we can't build them affordably anymore.
Yeah.
So for those of you who want to be landlords, now's the time to buy. Sit on them for 2 to 3 years. If you got 10 of them, you're probably going to make $1 million. Yeah. And then take your $1 million and decide what you want to do with it next.
Yeah.
So it's really that simple.
This is kind of one of the first times I've actually seen where you have those houses that are 200,000, maybe 225 or less. And the first-time home buyer is competing against the investor.
Yes.
For the same property,
Yep.
right? People can cash flow that, right? Mm-hmm. So, but a first-time home buyer that may be in their price point, even though money's pretty much free right now, they can probably get more for the dollar.
Yeah.
But it's funny because days on market's what, less than 7? Some of these houses.
If it's below $300,000, I want to say the inventory, months of inventory is not months, it's 7 days. Like 50% of inventory sells in like 7 days below 300,000. Yeah. I mean, the numbers of the quote affordable houses are selling so fast. It is absolutely mind-boggling. It really is. So I just keep telling folks, I'm like, and they're like, no, Jason, there's a crash coming because prices are going up. I'm like, so tell me why prices are going up. Well, people are buying houses. Okay, well, who are those people?
Yeah.
This isn't like 2006, 2007, where it was new construction. Builders were giving all these incentives, and they were giving people loans who could fog a mirror.
Yeah. Yeah.
This is like they're doing like checks of funds. So in other words, they're doing verification of funds for a mortgage for like a check you get over $1,000. Like, where'd you get this check from? I don't know. 6 months ago. Well, we need a letter.
Right.
And you're like, you got to be kidding me. So the people who are getting loans now, you go through the process. Now, I will tell you this, and I posted this up. If you've got a DTI above 43%, if you've got a credit score of 640 and you can put 3.5% down, you can be a homeowner here in the United States.
Yep.
The problem that's killing a lot of people, we had Jennifer Hernandez in last week, is she said that DTI is killing people because of student loan debt.
Sure.
So what's limiting the number of people to buy mortgages? It's student loans.
Yeah. It's because education is what, 70,000, 60,000, depending
It's
upon.
ridiculous.
Yeah. My state school went from, I think, 30 when I graduated. Now it's like 60,000.
It's doubled in price.
Yeah. So,
And you're about the same age I am, right? So in 20 years, it's doubled in price, right?
Yeah.
It's insane. I saw we did a whole presentation on inflation Monday night. If you want to see that, it's on. If it's not on Patreon yet, it will be. So if you go to our Patreon /MRTXRE, it's $25 a month. I did a whole thing on inflation. It was a market update with inflation analysis. And higher education since 2000 has increased almost 60%, while wages have only increased 10%. Housing is up like 40%, and I want to say healthcare expenses are up almost 60%. So if you're thinking like, real estate's going to crash and it's going to get cheap, and there's nothing out there that says that's going to happen.
I would say that if that's your belief that the market's going to crash, where do you put your money? Go to cash, and like you'll know you'll lose for sure.
Well, yeah. So here's the question I always ask: is when these guys run around with their hair on fire and they go, "The world's going to end." I'm like, "Did you sell everything? You need that single family house that you live in. That's $500,000. You need to sell it right now because you're going to buy it back for half the price, right? The market's going to crash. You could sell it, take your $500,000, wait and buy it back for $250,000. That's how you know That's how you know what they're saying is not right. I'll give you this is my theory. People who say the market is crashing, most of them are doing it because they're scared.
Yeah.
Because it's easy to say, "Oh yeah, I told you it was going to crash," or "That one house I should have bought," but then to be brave and go out there and fight the battle and build wealth, right?
Yeah.
How do they contact you, Brian?
Just through my cell phone. It's 713-620-8148, 713-620-8148.
All right, thanks for listening, folks. Excellent. Lunchtime.
Lunch.
Thank you, A-Rock.
Hey, Rock, thank you. Did it come through on the bets?